Hello, hi everyone. So we will start in a few minutes. I'm just sharing my screen so that you can just let me know in the chat box whether you can see my screen or not. Let me know in the comment box when you see the screen of Module 7 GHG emission calculation, and then we will start at 3:05 p.m. in UK time. I hope everyone is doing well. Can you see my screen now? Because it's a live stream, so sometimes it's taking some times to loading. Okay, thank you very much for the comment that now you can see the screen. Great. So since it's 3 p.m., so we will start now and just city and in which professionals you are and why you are interested in the GHG emission calculation. And parallelly, I will just start along with my introduction. So a few of them or few of my colleague, my subscriber, my followers know who I am. I'm just connecting my headphones. So just to introduce myself, so good afternoon, good morning, everyone, and welcome for the GHG emission calculations. For those who joining the first time, uh, my name is Jay. I'm sustainability and climate reporting professional, currently based in UK, with experience across consulting, asset management companies, clean energy transition, and ESG advisory. Over the past several years, I have worked on the climate risk assessments, GHG inventories, double materiality assessments, scenario analysis, and implementation of reporting frameworks, including ISSB, CSRD, ESRS. These are the so many of acronyms you heard in your professional life or maybe in your learning journey. So in today's sessions on GHG emissions calculations is a core technical foundation for everything that follows in GHG reporting or ESG reporting. So from transition planning to assurance readiness. So I'm really glad that you are already here and I look forward to our interactive sessions. Just to cross check, can you just comment that you can hear my voice clearly and you can see the screen clearly? Okay, let me increase the volume. Let me know whether you can hear my voice perfect or not. Anyone just can comment on my voice. Yes, so yeah, I will be little bit loud if you cannot hear. Okay, great. So let's continue. So just to clear about the before we jump into the today's sessions of GHG emission calculation of scope 1 and scope 2, I just wanted to make sure that today's module fits into the bigger picture. So because this is a part of a complete end-to-end ESG climate reporting journey, not a standalone class for the any kind of GHG emission calculation. So this series is designed as a 39 modules across 6 phases, covering everything from foundations all the way through to implementations and ESG reporting roadmaps. So phase one that covers overall foundations of reporting things, which is ESG and climate reporting stuff. So that covers understanding the global ESG reporting, that landscape of IFRS S1 and S2, CSRD architecture, ESRS1, ESRS2, and the goal here is to build regulatory and conceptual clarity for the phase one, and it's already live. And I already published for my subscriber and my followers for the phase 1 to 6 modules. I will shortly share all the links so that you can see and watch those kind of modules from module 1 to 6. So phase one foundation is already over. Currently, we are at phase two technical methodology. So this is the part of where we are right now. And in that particular phase two, that technical methodology that covers overall GHG emissions calculation and part of the double materiality assessment, impact risk opportunities and management, climate scenario analysis that I will share with you because it's a very typical analysis. So please stay along with my whole 2 hours webinar of GHG emission calculation, and I will share the details of climate scenario analysis, how you can understand and learn that climate scenario, transition planning, data system, assurance preparations. Those are the module covers all the technical methodology. And today's module 7 is scope 1 and 2 calculation, which is a module 7. In next module, we will move into the scope 3, and then we will move into the various scope of module. Then phase 3, that is cover ESRS topical standards. So in phase one, we already seen all the CSRD and ESRS related stuff. So in phase three, ESRS E1, E2, E3, E4, E5, we will see those kind of topical standards. And this is where you learn exactly what needs to be disclosed by the corporate company. Then phase 4, that is part of uh, applying the real industry, whether it's energy, manufacturing, finance, retail, real estate, logistic, agriculture, healthcare, mining, showing how ESG can differently reported across the sector, and including the climate reporting as well. So those are the stuff that is very important for the sector application that covers under the phase 4. And under the phase 5, we will cover the advanced implementations. That phase covers scope 3 supplier engagement, ESG data integrations into the various financial systems, assurance readiness, digital reporting, because CSRD and FRANG is now going for the XBRL reporting. So you have to understand as an ESG analyst or the climate reporting or the sustainability professional that how this reporting works. And also we will see the gap analysis for the overall governance structures. And finally, phase 6, that covers the synthesis of that we bring everything phase 1 to 5 together and building your ESG reporting roadmap that covers the best practice and end-to-end implementation strategy. So the idea is we move from frameworks, that phase 1 calculations, disclosures, sector use cases, implementations roadmap, and end-to-end stuff. So this climate reporting series is designed to bridge the theory between the regulatory theory and practical implementation. And my focus throughout this program is not just explaining the standard, but showing you the how actual standards can work and how it can be implemented in your practical life, so it might be easier for you. And in today's sessions on GHG emission is the technical foundation for everything that you follow. So climate target, transition plans, ESRS E1, and net zero strategy. So overall, the series update is phase 1 that is already live. I am sharing. So if you are new to this series, I highly recommend watching this 1 to 6 module, and that modules covers everything related to that CSRD, IFRS S1, S2, the timeline, the core ESG reporting foundations. So please check the chat links now in the chat box. I'm just sharing, and if you not received or not attend any kind of uh, session today, so I will share into your email box. Make sure you are connecting with me through the social media in Instagram or in LinkedIn, so that I can get your message and DM. So I'm just sharing the module 1 to 6 exclusively for my subscriber and followers, because we have a inclusive community, and I'm trying to share my experience to everyone so that you can also start your journey or increase your practical exposures into your corporate life, and that can be done. So I'm just sharing the links in the chat box. If you are not received or not accessed through the chat box, just I will share into your inbox as well. And yeah, so because of the text limit, I cannot share lots of links here, but I will try to share one by one. So if you want to save these links in your whatever place, then you can go ahead and save. I will also share into your email box. So just bear with me. I'm just sharing the all the 6 module links if you still not part of this whole journey. So I hope I shared all the module 6, and also before continue, I will be sharing all the template calculations, spreadsheets, and supporting resource inside our ESG and climate analysis group that is on the Instagram. So if you have not joined yet, please make sure you do so now. So I'm posting the group link in the chat along with the page. So you need to follow and the part of that group so that you can get the whole stuff on the time, and that is very helpful for you to be part of that whole stuff. So I just pinned the whole group page and the group link, which is called as a ESG and climate analysis group. So this is where I will upload the Excel calculators, practice sheets, updates on upcoming modules, and additional implementations tool that I already built. I will also share a few of the tools end of this module, so you also get understanding of those things. So if you don't want to miss any templates or future sessions updates, follow on the Instagram and join this group, and I will also share that group to share reminders and few modules announcement. I have pinned that whole things. We do have the WhatsApp group as well. I will share or through the email, and you can join the LinkedIn group, WhatsApp group. I will share across those kind of stuff. But Instagram, we created this ESG and climate analysis group, and you can join and we will share that thing. So with that context, let's move into our main module 7, GHG emissions calculations of scope 1 and 2, where we will start the practical real world carbon accounting, and that covers the overall GHG emissions reporting and the whole stuff that you are waiting for, that how this technical methodology work to calculate the scope 1 and 2, and including the scope 3 emissions. We will see the each and every scope, what is that scope covers, and why it is required to calculate everything we will covers, and we will see that how it's work for your practical journey. So let's move into the slide 1. That is a foundational concept for any kind of the convergence and bridging the gap between your reporting work and the atmospheric science. So you have to be a technical, be assured that you can understand better and how it's work for your climate analysis. So welcome to module 7. So this modules marks overall methodology that I mentioned. So today we will work fully aligned with the GHG protocol methodology. And by end of this whole sessions, you will understand how emissions are classified into the scope 1, scope 2, scope 3, how to calculate the emissions step by step, and what data you actually need, how to structure your final GHG emission inventory, and think that you are the bridging gap, as I mentioned earlier, for the atmospheric science. So here we see the ecosystem behind the carbon accounting. So GHG protocol uh, provides the accounting rules, which is set organizations, which is providing a standards, which is not a mandatory standard or framework that developed by GHG protocol, but it is developed a methodology that helps any company, any government, or any individual to calculate the GHG emission. Second is IPCC that provides a scientific emissions across the various emissions factors and global warming potential. And the third is the Paris agreements that sets for the global reduction ambitions, that net zero target for various countries, and every country is used to submit the NDC. So NDC is again different acronyms. We will talk that later on. So everything eventually converts into the one universal units that you can see, that is called as a tons of carbon dioxide equivalent. So the question is the formula you will see repeatedly, and you will have the questions that how this tons of carbon dioxide equivalent can be calculated. So the formula again you will see repeatedly. It's activity multiplications by your emissions factor, and multiplication by the global warming potential. So GWP is the global warming potential, and you will get the tons of CO2 equivalent. So this is the just foundation elegance. We will see the each and everything in detail throughout the session. So for example, if you burn 1,000 liters of diesel, so in your activity, the 1,000 liters is your activity. Emissions factors depends on your region, depends on your country. You can take it can be the kilogram CO2 per liter. And the third is global warming potentials that provided by the IPCC with various types of assessment. We will see each and everything in layer wise. So this convert physical activity into the financial grade climate data. So the key insight is all gases are converted into the CO2 equivalents. So emissions become comparable across the industry. So here you can see the CO2, methane, nitrous oxide, hydrofluorocarbon, petrofluorocarbon, sulfur, SF6, nitrogen, NF3. So all the gases are going to be converted into the tons of CO2 equivalent. So that is why the global warming potential helpful that developed by the IPCC. So now let's start how this whole conceptual foundations, the convergence that we already see, how this work. So for that, you have to understand the process of GHG emission calculations, that how it's work for calculation of scope 1, what is scope 1, what is scope 2, what is scope 3. So those are the very important part. So before calculating anything, you must define who you are reporting for. So this is your organizational boundary. So that can be the two approaches. So equity share approach, that you report emission proportional to your ownership, whether your product or your service is owned by you or someone else. For example, if you own 40% of factory, your report you have to report 40% of your emissions. So that is based on the economy based or equity share approach. And the second approach is control approach, that is most common utilized by the government or corporate companies or anything else. So if you are reporting 100% of emissions where you have your own financial control. So what is called as a financial control, where you develop your finance policies and financial capitals and capex, opex, and you manage all the stuffs by your company or by you only. Then your control approach will be uh, to the financial control on that side. So operational control is again day-to-day operations. So that can be authority to implement your operating policies, whether it's done by. So I can see the one of the comment related to that. Uh, if you are sharing the, yeah, so that I will share definitely. The session recording will be shared to you, and also the all the materials will share to you. Uh, So most common approach is the operational control approach, and this determines what becomes scope 1 and scope 2. So scope 1, that can be the direct emissions from owned operations, and scope 2 will be the purchase electricity and energy. So this is just starting to understand your boundary. So whatever calculations you are going to do in the next step, you have to define your boundary first. So you have to think from a broader perspective, from top to bottom. So you have to understand your boundaries first. Then now you have decided that the overall organizational boundary. Now step 2 is your operational boundary. You have decided that you are going to for the operational control, and through that you have to also understand where your operational boundaries are. So in that operational boundaries, you have to classify emissions by type, not ownership. So scope 1 is the direct one, that is a fuel burn in boilers, vehicle, generators, that can be part of the scope 1. So that covers overall direct emissions. Scope 2, that is indirect energy. So that is part of the scope 3 indirect as well, but that covers the scope 2 indirect energy for the purchase electricity, steam, heating, and cooling. So that is very important to understand how it's work for the various type of criteria for the scope 2, that is indirect energy. For the scope 3, that is part of the value chain. So everything else from upstream to the downstream, that covers under the scope 3. So we will see what is upstream and what is downstream, and why scope 3 is very much important. So scope 3 is a technically voluntary under GHG protocol, but required under ESRS, ISSB, CSRS related frameworks. But sometimes it is giving a relief for the first year, 2 years, through the standards and framework. And nowadays, lots of relief are going on under the EU as well as from other part of region. So that scope 3 is very important because it's often represent over 70% of the total emissions. So this is why value chain engage is critical, and that is why our module 8 will be the only for the scope 3 calculation. So now let's go into the formula, which is a typical formula. This is a golden rule for any carbon accounting calculations. So whether it's scope 1, whether it's scope 2, or whether it's a scope 3 emissions. So you have to understand that how this formula is working. So here you can see the tons of CO2 equivalent is equal to activity multiplications by emissions factor and multiplication by the global warming potential. So let's break this all the three down. So activity data will be part of your operational numbers, that you have to collect the data, or might be your subordinates or your superiors will collect those kind of data, or you have to collect the data if you are an analyst, or data collections into this whole end-to-end process. So your raw operational number will be liters of fuel, kWh of electricity, or kilometers of travel. So those are the raw data. I'm just giving the example. We will see the detailed calculation as well. And those data will be sourced through the utility bills, fuel receipt, or your digital meters at your home or at your organizations, or at particular assets. And the second one is the emissions factor, which is very important role that helpful for conversion coefficients. So it can be anything, and the unit must be decided before you are calculating anything. So it can be kilogram CO2 per kWh, or kilogram CO2 per liter, or kilometer. So it can be anything, and those emissions factor will be different region wise, country wise, or based on the location. So the sources can be the UK DEFRA, which is developed year by year, various emissions factor. EPA, that is developed under the USA. IEA, that is under the India. Also the E-grid is also part of that whole journey. So locations wise, jurisdictions wise, and control wise, those emissions factors will be different, and you have to decide yourself that which emission factors is helpful for your particular products and journey. And the third one is a GWP, that global warming potential from IPCC. So this converts methane, nitrous oxide, and all the GHG emissions that I showed you in the first slides into the CO2 equivalents. That is called as the CO2e. So ultimately, it helps you to convert tons of CO2 equivalent. So you have understand the activity, you have understand the emissions factor, and you have understand the global warming potential. If you have any questions, just keep your question ready. I will share the Q&A session, and then during that time, I will see those comments, and then we will answer on that particular side. So the best practice is a direct measurement. First, you have to collect raw data, you have to calculate and all the stuff. Sometimes those data is not available, so you can do proxy methodology, or sometimes you do industry average. I will show you in the Excel calculation as well. So that can be helpful to calculate, but estimation is very much harmful for your reporting. So direct measurement or the direct calculation based on the GHG protocol methodology or your methodology will be helpful, rather than the calculated estimation. So next we will move into the scope 1, that is direct emission. So now we will start in detail that what are the scope 1, what are the scope 2, and how it calculated for each and every stuff. So here scope 1, that is include emissions you directly control. So technically, the four types of emissions that you directly control, you means your company or your product or your service. So first one is stationary combustions, that covers boilers, furnace. The second one is mobile combustions, that can be covers fleet vehicles, jets, etc. And the third is the process emissions, that covers cement, chemicals, or any kind of manufacturing process where the emissions has been generated. The fourth one is a fugitive emissions, so maybe refrigerator leaks and all types of stuff that helpful for any kind of leakage through the cooling or heating. So what I saw in the market and the corporate companies, that people are understanding only the mobile combustions, only the fleet vehicles that they are using, and they are just calculating those kind of emissions. And when they are reporting at the end of the year, and uh, the standards and the frameworks and government asking for the other emissions, then they don't have those particular data. So that is why here you have to understand that scope 1 covers four types of emissions. It might be possible, definitely 70 to 80% is the mobile combustion, but sometimes region to region and country to country, you might have those kind of other emissions as well. So you have to understand that whether these emissions lies under your company or service or products or not. So here you can see the example of mobile combustions, that jet fuel used 120k gallons, and the emission factors that used as per the UK DEFRA, which is 9.75 kilogram CO2 per gallon. So the calculation is very much simple. uh, you have to multiply it 120k gallons into the 9.75 kilogram CO2 equivalent per gallon. So that is why it's directly comes under the 1170 tons of CO2 equivalent. So this is exactly how you are calculating your fleet or any kind of generator emissions. So we will see in details that how other emissions and other things is working for any kind of scope 1 emissions. Now, let's move into the scope 2 methodology. So scope 2 is typically two mandatory reporting methods. So it depends what you are reporting. So under the scope 2, as we seen that purchase energy, or you are using any kind of energy, electricity for your product, for your service. Yes, I will provide the data collection template once this whole sessions will be ended, and a few of the templates that I already using for myself as well. I will also provide this kind of stuff. So for the scope 2 has a two mandatory reporting methods. So first one is location based, and the second one is a market based. So let's see, the first one is a uses of grid average, that is emissions factor. So location based, it means if you are in UK, then your product and your service emission factor for the electricity is different than the you are in Brazil. So country to country and the region to region, those emissions factor will be different, and you have to see your central electricity authority, that they definitely have published location based emission factors for the electricity grid average, and that reflects the physical electricity supply, so that you can calculate those location based stuff. Second one is the market based. Most of the corporate companies, most of the individual, and most of the governments who are calculating the scope 2 is particular based on the location based. Market based is used when the contractual instruments have been used. So that is called as RECs, PPA agreement, which means power purchase agreements or green tariff agreements. So market-based approach, when one of the company or maybe government or corporation or city corporations have a power purchase agreement with different suppliers, that they do have the different power purchase agreement, and for that particular agreement, it depends which emissions factor they have used, which market-based emissions factors that they have used. So if corporations or a city or any corporate company are using the renewable energy, and the suppliers already have agreement of the green tariffs, then the emissions factor will be different. We will see that how the emissions factors is different. So in that particular market based stuff, if you are having a contractual instrument, then you have to disclose your market based approach for the scope 2 indirect energy. So companies must report both reduction levers in different reporting methods across your ESG report. So you have to report based on your location-based methodology as well as the market-based methodology. If you are following CSRD, ESRS reporting work or ISSB reporting work, most of the jurisdictions and the listed companies have to follow the ISSB related stuff because of the mandatory from the G20. So that is why you have to report location based scope 2 as well as the market based scope 2. We will see that how this scope 2 is different than each other. Now we will move into the scope 3. Location based reduce the energy consumption, and the market based can be the buy renewable electricity. So both numbers are required for compliance. Similarly, in scope 3 that I already mentioned, the value chain related stuff, which is very important requirements for the upstream and downstream. So scope 3 is the very much important, and it is called as an iceberg. So under the upstream part, will the renewable on-site offsite also be accountable? So renewable energies emission factor will be different rather than the normal emissions factor. All the emissions factor will be developed by the Central Electricity Authority. In UK, the DEFRA is the department. In India, IEA is the department. Similarly, in US, EPA is the department. So in renewable energy, if you are taking electricity from the wind mill, then your emissions factor will be different. If you are taking electricity from the solar power plant, then your emissions factor will be different. And if you are taking nuclear energy, then your emissions factor will be different. Similarly, coal-based power plant and other stuff. So based on that, you have to decide it, whether it's scope 2 through the renewable energy, and you have to decide it based on your market-based methodology and emission factor coefficient. So I hope I have answered your questions. If not, then we will have the question answer session as well, so that I can continue the scope 3 as well as the other part of calculation. So under the scope 3, that is the value chain, you have to understand your upstream and downstream. So if you are into the particular position or particular products or providing any service, you have to understand what is your upstream and what is your downstream. So any products or any service have the upstream, and any products have the downstream. So upstream mostly covers the purchase goods, transport, employee commuting, and the downstream can be the product use that can be used by the customers or the communities, and maybe your products disposal by to landfills. And if you are into the financial institute, then you have to do a investment as well. So that is part of the downstream side. So here the reality check for most of the companies, scope 3 dominates the overall total carbon footprint. So if you are calculating the all the 15 categories, scope 3 1 to 15 category, then definitely it is more than the scope 1 and 2. But it is very typical and difficult to calculate because the data is not available for every types of category. However, it relies heavily on the estimate and the supplier data as well. So documentation is very much critical, whether you have do assumptions or what. So you have to understand your cradle to get that category 1 to 8, from starting purchasing goods and services to the end of your investment category. So we will see in module 8 the detailed scope 3 calculations, that how each and every categories can be calculated. But before that, you have to understand what is your upstream and what is your downstream. So for us upstream category, as I mentioned, the category 1 to 8 that covers the upstream and downstream. And category 1, category 2, category 6, and category 7 can be part of the major key upstream category. So mostly those corporate companies and the individuals calculating those kind of stuff very well. So purchase good usually calculated using a spend based factor. So based on your spend of your pounds, dollars, and based on your industry intensity. The capital goods that can be your building, your machineries, those are the capital goods. In the category 6 business travel, definitely your senior management and board travels under the business travel. Category 7, employee commuting. So who those people who are those employees who are coming through their car or vehicles, that you have to include those kind of uh, uh, commuting under the category 7. And that also covers the remote working energy, those employees who are working remotely. All those home based energy or home based related stuff will be calculated under the category 7 of your company. So this category represent what you buy, and what you are taking a service of your whole product and value chain. The downstream category is also very much important, that focus on uh, overall sale of products, that category 11, and mandatory if the product consume the energy or not. So that is very important part to understand whether upstream category or downstream category. And the category 11, category 12, category 15, so that is mandatory if products consume the energy. For the category 12 is the end of the life. It means your product or your service will go to the landfill, whether it's part of the recycling or whether it's part of the incinerations or how it's work. And the category 15, it's investments. So for banks and asset management, for finance emissions, you have to calculate, and based on the investee emissions, you have to multiplications by your equity shares. So I will also take one separate modules for the category 15 investment, because it's a huge financial investment. Finance emissions calculations is very typical, and you have to understand those kind of stuff, that whether it's important or not for your products and service. So these are the scope 3 upstream downstream category. Now step 4, we have to go to the tracking and the base years. So currently we are I am showing you the steps that you have to follow when you are calculating GHG emissions. So before calculating, you have to understand the whole scenario, why it is important. So step 4, it's tracking and the base year. So you must establish step 4 for the tracking and base year. For the recalculations can be triggered by if your company is merging to any other company. So, for example, Tata has take over the Jaguar, then it's a merger of the Jaguar. So, for Tata, they have to recalculate their base year because the Jaguar is coming. So similarly, they do acquisitions, they do have the structural changes. So in that case, you have to recalculate your base year, and then you have to report for other tracking or other base years. So that is very important to understand. Now, few of the points that is not triggered by if organic growth is happening or lower production is happening or maybe outsourcing is happening. So those kind of points during those kind of situations, you don't have to recalculate the base year. So this ensure year to year comparability, and when you are reporting, then up to date you can report based on your standards and frameworks. Now, we will move into the setting targets, which is a very important stuff. So, two target types, which is called as absolute target that reduce the total emissions. So, you have the absolute target from your company, from your government, from your country. And second is the intensity target. So, reduce emissions per revenue or maybe per unit based on your product and based on your service. So, those kind of intensity target you have to define through the carbon neutral, maybe offset heavy, and for the net zero it requires 90 to 95% real reductions, and only the residual emissions may be the part of the offset. We will discuss offset in later on because it's a part of the carbon credit, and morally and ethically I'm not in support of the offset or carbon credit because it's ultimately not reducing the emissions on the earth. So net zero must cover scope 1, 2, and 3. So that is part of the overall target setting. So here you can see the absolute target, which is reduce the total tons through the planetary impact. The second is the intensity target, which is helpful to reduce the emission per unit, maybe based on your revenue, maybe based on your growth of your whole energy or maybe your product. And those kind of stuff is helpful to do a carbon neutral. Sometimes to do a carbon neutral, you might be have or purchase a carbon credit, or you can rely heavily on the offsets. But you have to understand the scenario and the game of the carbon credit. And the second one is a net zero. So SBTI, which is a science-based target initiative, giving you the opportunity to cover scope 1, 2, 3, and you have to decide it, you have to commit your target, and you can get the SBTI based batch as well. So overall reduction should be the 90 to 95% to become a net zero, and the gross emissions will be reduced by the 90 to 95%, and residual can be part of the less than 10% of the emissions, because it's year by year it might be increased, and you cannot 100% net zero at particular point. So that is a setting targets, which is a very ambitions and commitment and terminology for the senior management and the owners. And as a sustainability professionals, you have to take care of this whole targets and tracking and monitoring, so that overall journey can be helpful for your company. Now, as I mentioned, the offset of carbon credit, which is a very important role that helpful for reduce the emissions overall on paper, that covers the offset are the last mile. So they must be a real, that can be the additional, that can be the permanent, and that can be the verified. So offset are never subtracted from the gross emissions, so they are disclosed separately. So that is why the game is different. So first you have to reduce internally, and then you have to do a offset residual based on my opinion and my advice. So the offset credit is the last mile decarbonization. So when you have proven that you have done your all the stuff for the decarbonizations and all the stuff, and then you can go for few emissions or few tons of CO2 equivalent, you can go for the offset, and then you can disclose that our company is going to be net zero by 2030 or 2050 or 2070. So that is the role of the offset credits when you are representing the overall GHG emissions. And then step 5, definitely it's a very reporting and disclosure. So during this whole process, you have to be ready with your documentations, whether your emissions factor, your GWP, or weather activity, and everything you have to document. Uh, so your GHG report must be relevant, complete, consistent, and the transparent, so that your uh, third party assurance company, which is maybe Big Four or any kind of other consultations coming to audit your whole ESG report or the financial report or non-financial report, then you can give the whole documents to your third-party assurance consultant, and those required disclosure will helpful. So scope 1 and 2 totals emissions by gas based on your methodology. What are the scope 3 categories you are going to disclose? What are the exclusion? What are the inclusion? What are your assumption? So this all stuff which is a reporting and the documentations, this creates a audit ready sustainability data. So ultimately the sustainability reporting, which is called as a non-financial reporting work, that is covers the GHG emissions very well, scope 1 and 2 and 3 as well, which is again it's very similar process of financial audit, and nowadays is very much relevance and the accuracies you have to do. So ultimately, the statement of the GHG emissions in your report, the example reporting structures at the end of any kind of reporting should be look like this. That scope 1 emissions is this, scope 2 emission is this, scope 3 emissions category, whatever categories data you have, you can just mention that total gross emissions by the category. And offset appears only whenever the information is available, and it is not necessary to mention any kind of offset if you don't have. So this structure is exactly what auditors, CSRD, ISSB, IFRS, BRSR or RBI, or maybe other listed companies who are into their Malaysia, Singapore, and China related stuff. And also the investors' expectation is also the similar kind of equivalent reporting work. So GHG accounting is not just environmental reporting, it's operational finance translated into the climate impact. So that is why the regulations is coming up to become a low carbon economy. And to master this whole process, you can unlock CSRD readiness for your company if you are into the a particular process or ISSB or any kind of other reporting work, net zero planning, assurance confidence, and the strategic decarbonization. So those are the stuff that if you are well into the GHG emission analysis, then you can unlock this whole kind of potential. So now we will move into the practical part, the Excel analysis, and we will calculate the scope 1 and 2 emissions in the Excel. I will show you. And before that, let's revise what we have understand and for the GHG emissions. So for before that, let's take some questions answer through the chat and the comment box. So there are three uh, different way that people has been joined through my subscriber, through my followers, through TopMat, and through other Google Meet locations. So you can type in the chat box. I will just read that question, and then I will try to answer your question. So we will have 10 minutes for the question answer. And if we don't have any kind of questions, I can see in the chat box. But if we don't have any question answer, then we will move into the revision slides. So you can type your questions into the chat box. Yeah, all the materials I will share through the mail. If you have not joined the links, you should join all the links so that you might get all the updates. WhatsApp group, definitely we do have the WhatsApp group. I will also share the WhatsApp group link. Did you input scope 4 in calculation? So scope 4 is not part of this whole ESG end-to-end series, and also not part of this module 7. Scope 4 is totally different than the scope 1, 2, 3, definitely. Scope 4 is not mandatory by the any kind of regulations yet, because scope 3 is still under the progress. And I will take one session on the scope 4. I already take sessions for the particular community and the particular requirements where they have to do a scope 4 emissions. And I will explain why the scope 4 is currently not important, and it is mandatory for those who do want to voluntarily report those scope 4. So yeah, I will share the PDF as well, so you can go through it. Can you have emission factor for Indian context? Yes. So for the emission factor in Indian context, you can go to the CEA website, Center for Electricity Authority, and you will find the emissions factors over there. And based on that, you can calculate those kind of emissions coefficient as well. If you didn't find those kind of emissions factor, reach out to me and I will share those kind of links. Can you please provide us the data collections done for the entire scope 1? Yeah, definitely. I will provide the scope 1 template. Before that, you have to connect on the Instagram group and the other WhatsApp group or LinkedIn group, so that you will collect, because I cannot share into YouTube Live. Will the I already mentioned the answer. So I will need the notes from 1. Yeah, I will share what is the category 2 in scope 3 and why it is not in scope 1. So in the category 2, the scope is very important for scope 1, 2 emissions. So in scope 3, you can see that, let me share my screen. Yeah, so you mentioned about the category 2, which is a capital goods emission from the production of various assets, that machinery, buildings, and vehicles. So when you are doing a scope 3 emissions for particular category 2, uh, GHG protocol is also mentioning that you have to mention those kind of emissions which is not calculated or not reported into the scope 1. So here emissions from the production of capital asset, it means if you are into the construction company and you are utilizing the JCB, then that is your capital goods, that is your capital machinery. So you have to calculate your JCB's parts related emissions where from the JCB is coming up. If you are using steel in your construction or any kind of your product or services, then you have to disclose those kind of steel related emissions. So you have to ask your supplier that what is the emissions of your steel that you have supplied. And that is why uh, all the procurement, all the materials are going to part of the sustainable material where emissions can be less or maybe zero. So that is why EPD's production declaration is coming up. LCA has to be done. So category 2, that is part of the capital goods. So whatever goods or machineries or any kind of hard assets that you are using for your process or services, you have to disclose those emissions, and that is part of the scope 3 category 2. I hope I answered your question. And yeah, so where to get the emissions factors for on-site and off-site renewables? So for the UK DEFRA, I can see the one questions for the renewables related stuff. UK DEFRA, it's mentioned all the stuff. EPA USA, they also mentioned the off-site, on-site related stuff. Some of that emissions factor are also based on the ground-mounted and the floating solar as well. So it depends on country to country how advanced they are. And if you don't have the particular emissions factor, then you can utilize the existing factor and you can mention those emissions factor in your methodology. So I come from the monitoring and evaluation background with zero experience in the subject matter. How do we avoid double accounting across category? So you are doing a monitoring and evaluation. So you have to see that whether scope 1 emissions is you have to understand the methodology of the scope 1, 2 and 3. So you have the zero experience, so that is why you have to develop your skills that how GHG emissions end to end process. So for that you have to typically see that which type of emissions covers under the which category. So for sometimes mobile combustion is covered under the scope 3 for the employee commuting. So in that particular things that you have to tell your subordinates that this can be part of the mobile combustion for the scope 1, because you owned the vehicle, you own the things. If your employees is commuting travel between home and work site, then it will be part of the scope 3. For the double accounting, there are several types of incidents that can be happen, so based on the service to service, product to product. So you have to typically see that scope 2 emissions, which is electricity supply. In your category, based on the locations, you have calculated the emissions. Now your company has the investors as well. So those investors also have to reporting to the government and to the frameworks and to the standards. So you have to understand that your investor is not going to report those scope 2 that you have calculated and you are going to report. And based on that, you have to discuss with your investors or your stakeholders that we are going to calculate the scope 2, scope 3, or maybe 40% of owned emissions, and you have to calculate the 60% of emissions. So that is why organizational boundary and operational boundary is very important, and based on that you can decide where the double counting not happen when you are doing a reporting work. I hope I answer your question, and if not, you can just directly message me, and happy to call on that side. How to devise the organizational and operational boundary if a MNC company has headquarter branches, franchisee 50-50%, franchisee with less than 49% whole, lease office or factory. I'm not getting the exact scenario that what is you are trying to say, but basically the organizational and operational boundary is based on your investor, as I mentioned in earlier question, that any investors, any asset managers, if invested in your startup, in your product, or in your services, you have to discuss with your investors with through the board members that you own the 40%, you own the 30%. Are you going to own this whole emissions or not? If not, then you have to report your own emissions. That is part of your first organizational boundary. Now let's go into this operational boundary. So now in operational also you have give contract to the different company and different scenario for the different products. So you have to also discuss with your stakeholders that are your contractor or maybe service providers, that are you going to report those kind of operational emissions. If so, then you don't have to those kind of operational emissions. So here you have to understand uh, your reporting is part of your scope 1, scope 2 or scope 3. Sometimes operational drivers or service providers or the contractors is mostly accountable for the scope 2 scope 1 emissions, because they are doing operation and scope 2 emissions. So most of, if you are just taking the services from the service providers, then you have to discuss with your whole stakeholders, and then you have to decide whether this emissions is falling into the particular stuff or not. So every incidents, every situations, every product have a different scenario and different part of the stuff. You can decide whatever that you want, but you have to disclose in your whole ESG report. What determine in scope 2 when to use market based and local based. So so market base is definitely if you have the any kind of agreements for with your suppliers who are providing the services of electricity, and the local based is location based is based on the locations and region and country. Ultimately you have to report for the scope 2 along with the both methodology, so you have to report and calculate in both methodology. Wondering how reliable estimates from scope 3 emissions are. For example, who reports energy consumption of an employee working from home, the employer or employee? Would this be only energy used for work? Yes, definitely. So, as I mentioned, if someone is working under the category 7 or category 6 for the scope 3, and they are working at home, then definitely their home energy use can be part of your scope 3 emissions. And since you are also providing lots of equipments to your employee, so that is why you are owning that whole GHG emission, because it's indirect emissions and you are part of that whole value chain. What are the groups called in Instagram? So that is, I also pin the link which is called as a ESG and climate analysis, so you can join and you have to follow the climate AI lab, so you can get all the stuff into that. Decarbonization and net zero roadmap is to offset all scope 2, 3 alone or beyond? If beyond, what are coming into the picture? So it's a good question. So decarbonization and net zero roadmap is not to rely on any kind of offset. So decarbonization and net zero roadmap, you have to showcase your technology. You have to showcase that which type of sustainable material or maybe technology you are going to use in next 5, 10, and 30 years. And based on that, you have to disclose your emission reductions, your medium term, long term, and short term target. And if your emissions in your calculations, if those technology, those materials are not going to reduce the net zero by any particular year that you want to become a net zero, then you can utilize the offset and the credits. For that, you have to definitely purchase the certificates from the markets, from the various type of registry, and you have to disclose that I have purchased those kind of stuff. So all the large companies, Microsoft and other stuff, they are doing those kind of stuff because they do have the target, and they can't reduce the emissions because day by day the new development is coming up. Now AI is coming up, so the data center is required. So Microsoft has a different target earlier, but now the AI is coming up, so the data center is also required, and data center consume lots of energy, and that create more emissions. So that is why they are going to purchase offset or the credits or from the market, because they do have the capital, they do have the finance, they can spend money to the market, and they can do sustainable projects and they can get the credits. So these are the whole game that is very separate, but I would suggest that you should go with the various technological decarbonization journey like carbon capture or anything and other sustainable materials, and based on that you can decide your net zero roadmap. Climate AI lab is the name of Instagram. Uh, India has mentioned in COP that it will become net zero by 2070. Definitely, not in the COP, but definitely net zero by 2070. They have mentioned in Paris Agreement as well as the NDC. So every year that they have to disclose net zero by 2070. How it is possible to achieve as India as a whole who can control individual emissions? How it is possible to achieve as India as a whole? Sorry, I didn't get your question clearly. So definitely it will be control individual emissions through the country target. So it is going to be that. Thank you for sharing the climate lab. Thank you. Thanks, sir. You have answered my question thoroughly. So please provide LinkedIn group. Many thanks. Okay. So if you have any question, just type. I will just share my other questions and link. I will just share, and in few minutes we will be on the Excel side. So this I'm sharing. This is my LinkedIn. Few people has mentioned that share the LinkedIn group. So LinkedIn group that is called as a ESG Insight and Opportunity Hub. So you can join if you want. In WhatsApp group also I'm going to share. Bear with me, I'm just sharing my screen for the revision slide, and I'm just sharing the WhatsApp group link. But make sure that you are joining the Instagram group so that we are going to, and YouTube group so that you will receive the. So this is the WhatsApp group. Yeah, so just subscribe my YouTube channels. This all the modules are not going to be publicly available for some times, and this is exclusively for who are part of this whole community on Instagram and the YouTube, and that is why I'm sharing those link. I will also share the whole module 6 link into your email box if you are not take care of your whole links. So don't worry about it, and you can uh, go through the each modules based on your convincing. So let's go into the revision first, because we are going to Excel calculation as well. So the core competencies, the learning outcomes is the boundary definitions. Scope 1 computations is very much important. You have to understand your mobile process fugitive emissions, and you have to understand the scope 2 dual reporting. Someone has asked about the double reporting because they have to understand about the master of the location based as well as market based accounting. I just wanted to confirm that you can hear my voice and you can see my screen very well, so that I can get the answer. So you can just comment or maybe just give the emoji. Can you hear my voice properly, and should I continue? Okay, thanks Vinod. So scope 2 dual reporting and the quality assurance. So manage the emissions factor selections of uncertainty assessment. And those are the very important part for the GHG emissions calculation. So here you can also see the GHG protocol corporate standard principle that helpful for each and every calculation methodology. And for that, you also require to understand for relevance, completeness, consistency, transparency, and accuracy. So those principles which ensure the credibilities of assurance and which is very important for that. Then definitely of any kind of organizational boundary. Someone has asked about those organizational and operational boundaries. So here is again revision slide. So you can also see that the equity share approach as well as the overall uh, uh, operational approach. So equity share will be the report based on your ownership percentage. Financial control report 100% if you control the finance. Operational control will be the report 100% if you are control the operations. And for example, in 50-50 joint venture, that someone also asked, and I hope that same question is very much relevant to that slide as well. 50-50 joint venture, then equity share reports will be 50% and operational control reports 0%. So if your partners operates the site, so that is very much important. So I'm just sharing this things into the chat box as well. That 50% joint venture equity share reports 50% and operational control reports 0%. So if your partner operates the site, so partner it means your financial joint venture partner. So that is the things that you have to understand, whether it's operational or whether it's the things. I will share the detailed document as well. You can go through for the operational boundary and organizational boundary as well. Don't worry. Then definitely, it's a typical. This is the core formula: activity data, emissions vector, GWP, and always confirm that whether you are using AR5, which is assessment report from IPCC 5, or AR6 GWP values. So that is very important. I will also show you what is the difference in quick manner. So scope one, stationary combustion, that are part of the main intertight mobile combustions, stationary combustion, process emissions, tight fugitive emissions, that is refrigerator leak or any kind of thing. So mostly that part of the SF6 related electric equipment leakage. So you have to understand on that side. Calculation demonstrations for the one of the example of industrial natural gas boiler. So it is just a simple example that is calculated. So identify activity is the 50,000 meter cube of natural gas utilized by the one of the natural gas boiler, and the emissions factor based on the UK DEFRA is utilized through the 2.03 kilogram CO2 equivalent. So here you can see the CO2 equivalent per meter cube. So if the CO2 equivalent emissions factor is there, then you don't have multiplication by the GWP, because this emissions factors covers the GWP. We will see in the Excel. And then calculate the overall. So 101.5 tons of CO2 equivalent is the final calculation. Then this is the mobile combustion related to that 10,000 liters diesel that utilized by the activity data, and the 2.68, that is the emissions factor for the CO2 equivalent per liter. Again, it's a CO2 equivalent per liter, so that is why GWP multiplication is not there. And the overall calculations will be the multiplication, simple scope 1 to scope 1 emissions calculation. Here is the fugitive emission. As I mentioned that most of the people are using mobile combustions and based on the vehicle analysis. But here, if you have the refrigerations or any kind of EC or any kind of other stick, which is mass balance approach that you have to understand. And for that calculations, you have to calculate overall stationary combustions for for fugitive emissions. So refrigerant are powerful for the climate gases, that covers the SF6 value. And using the mass balance method, if 50 kg leaked based on the particular area that covers, here you can see in the visual diagram, then in overall the GWP will be the 2088 that mentioned in the UK DEFRA emissions factor. And the ultimately 105 tons of CO2 equivalent will be the answer for the refrigeration's leak emission. So the key insight is the small refrigerant leaks can exceed thousand of liters of diesel's emissions, and it is helpful for to understand what are the impact in terms of CO2 equivalent. So here is the 50 kilogram leakage is based on the resolutions of 410A, which is part of the GHG protocol. So you have to understand the fugitive emissions if it is applicable. So very less than 5% corporate companies is calculating those mass balance approach for the refrigerator. Scope 2, the indirect emissions, that is from the purchase electricity. So from the location based and the market based, you have to decide. And based on that, you can calculate the activity data, grid average emissions factor, and total emissions. As I mentioned, the calculations for the market based, that accounting for the contractual instrument. So here is the scenario that 100K kWh consumptions and 100% covered by renewable energy certificate, which is REC. So that is called as a renewable energy certificate. Then what is the emission? So overall, the consumption is 100K kWh, and the contract emission factor is zero because the green tariff for the renewable energy certificates you have. So that overall your market result for the scope 2 will be the location based is 45 tons of CO2 equivalent, and based on the market based it will be the 0 tons of CO2 equivalent because it's a reduction due to renewable purchase. So here you reduce the scope 2 emissions because you have the renewable energy certificate. Here is the very important part for the biogenic emissions. So the special handling the biogenic emissions, that is part of the CO2 emissions from the combustion, and for the biomass or the biofuel. So CO2 portion is the biogenic. So that helpful for to understand whether it's a methane and N2O portion is there under the scope 1 or not. So what this diagram is showing to you is you have to understand for the CO2 from biomass is reportedly separately as a memo item. So you are using diesel, then definitely diesel or petrol or any kind of other fuel which is oil based fuel, then it generate the CO2 more. uh, Now you are using biomass or biofuel, then also CO2 is generating, but you have to report that emission separately because that emissions factor is separate. So biogenic emissions factor will be different than the diesel and petrol, so you have to report separately and report a memo item differently. So in that case, CO2 will be definitely reduced if you are using a biofuel or biogenic emission. But sometimes uh, methane, which is CH4, and nitrous oxide N2O from biofuels, it generate more emissions than the CO2. Then overall tons of CO2 equivalent in scope 1 will be very high. So this is the double counting that was someone asked in the chat box related double counting. So if you are not into the biogenic emissions, if you are using biofuel, then only definitely this biogenic emission is coming up. But in developed area like US, UK, and other European countries, they are using biofuels very frequently, or methanol or ethanol or any kind of other oil products. So never mix biogenic CO2 into the scope totals, and you have to separate report under the scope 1 inventory. So if you have any kind of biofuels or biogenic emission related questions, just share in the group and I will try to answer on that side. Then inventory quality assurance, as I mentioned. So overall summary is for the scope 1 is fuel based and mass balance approach. Scope 2, definitely you have to do a dual reporting, location based as well as market based, and you have to focus on the grid average emissions factor and your renewable energy certificate or the green tariff. And the formula is very simple: activity, emissions factor, and GWP. So now we have conclude the revision slide as well. So I want to just clarify that GFG accounting is operational data that translating into the climate impact. And to master this fundamental, you have to understand the frameworks reporting, the standard frameworks, which help you to understand why it is so important nowadays. And science-based target and the assurance-ready inventories is very much important to calculate GHG emissions in a management way. It is not a simple things that you have to calculate. It is a very complicated calculation. I made a very easy to understand very clearly that why GHG emission scope 1 is working and scope 2 emissions working differently and scope 3 emissions working differently, so that double accounting cannot be happen when you are doing a reporting work. So let me share my screen of Excel sheet now. Let me know when you can see my Excel sheet. I can see can we use power rating of equipment for calculation as a proxy? So power rating, if power rating is giving you any kind of energy consumptions for under the scope 2, then definitely it will be helpful for the calculation and you can utilize. You have to just mention that methodology or assumption in your ESG report or the climate report when you are publishing or you are doing a documentation work. That is very important. So you can do lots of proxy data. Definitely we will see what are the proxy data which is generalized used by the various companies. Let me know when you see my screen of Excel sheet. Why we need to calculate for renewable energy? So for renewable energy, uh, if you have the renewable energy certificate, then your emission factor will be zero, and you can showcase your renewable energy factors or renewable energy scope into your end-to-end ESG report or the climate report, because it's very important to disclose you are using the renewable energy. And maybe renewable energy certificate or the green tariff will helpful for your decarbonization journey if you have reduced your carbon from the scope 2 emissions. Okay, thank you. I can see the comments that Excel is visible. I will just increase the size so you can see. So thank you very much for the comment. Yeah. So for the industry, for the scope 1, 2 emissions, I am taking an example of shipping industry where one of the company which is built a sustainable ship and they are transporting or selling the ship to the various types of operators, and they manage those kind of ships. Ships covers long vessel, container vessel, wind vessel, any kind of vessel. So the company is a ship owner company based on London, and the operation is through the Singapore and other stuff. Instruments, as I mentioned, they do have the ships, vessel, electricity that used by the various offices or maybe their manufacturing unit and other stuff. So we will take one example to understand how to calculate the emissions and what are the scope 1 emissions for them. So here it's very simple for the company which is a shipping company, for example, Musk or Vestas or uh, any kind of the big company which is providing big ships to the various people like Adani and other stuff, and they are using those ships to transport the various goods one country to another country. So I take example of one of the London based company that I also worked for them, and I created the whole GHG emission inventory for them for the typical area, which is a shipping transportation, which is a very typical area, and it's very uh, typical to reduce the emissions. And that ship owner built a sustainable ships that can be run through the ethanol methanol, and I was the technical uh, advisor for that, how it's work on that side. So here, info and sources, so how the general information and sources you have to compile and for your company. So since it's a GHG emissions inventory, you can just divide it scope 1, scope 2, and scope 3. You have to understand your product and service first, whether it covers your activity, what are the source that you are taking the raw data, what are the assumptions and comments that you have, and what are the final units that you have. So that is very informations and sources that if anyone third party is seeing your Excel sheet, then you might have a great idea, and they might have a great idea that okay, this company is doing this, and those companies are part of the scope 1, 2, and 3 emissions. So here we are taking example of scope 1. So as I mentioned, it's a ship vessel based company, and in MGC, CTV, CSOV ferries, that is the type of the vessels, the medium gas carrier or the crew transfer vehicle or the crew service operation vehicles or the ferries. So if you search various types of ships, that containers, gas carriers, and other stuffs are there. Activity will be transportations definitely, and which fuels that they are using for each vessels. So medium gas carrier is utilizing the marine marine HSFO, LSFO, or diesel gas oil. So mostly marine diesel gas oil is utilizing by the all types of vessel, and slowly they are going to use by the methanol, ethanol, and other biofuels, which is a sustainable fuels through the ships. And ferries definitely can be part of the electrified ferries, or through the ferries or the ECTVs like that. So the activities is the fuel consumptions that they are doing. What are the sources? So here you can see the IMO and the GHG protocol. So based on the GHG protocol, they are following the GHG calculation methodology based on the GHG protocol as well as the IMO DCS. So IMO is the International Maritime Organizations, which is based on the UK, and they also have the reporting standards, and based on that also they are following those kind of stuff. So that is part of the sources from where you are taking your methodology. If you develop your own methodology, then you have to disclose your whole documentation. If you are following any particular emissions factor, then you have to disclose the particular emissions factor like UK DEFRA, Dutch emissions factor for Netherlands, etc. And this row for the assumptions and comments. So any kind of assumptions if you have taken, if it depends on the situations. If you don't have any raw data, then you can have comments on that, and the final units. So what type of final units you are going to calculate of your tons of CO2 equivalent. Similarly, fuel consumption and the scope 2. So what are the scope 2 emissions you are going to calculate? If you have any kind of RECs or green tariff certificate, or you are going to calculate the location based calculations, in that you have to disclose which emissions factors you are going to utilize. So based on that, this info and sources can be helpful for your starting of your calculation. So first one is a project information. that covers operational boundary, organizational boundary, and the project info or the company info. Second is informations about your GHG calculations. And the third is the GHG calculations itself. So now we will start the calculations for all the vessel numbers and vessel names, vessel types, and for the scope 1 emissions. So for the scope 1 emissions, so for the scope 1 emission, here vessel number definitely it depends based on the registration number. You can mention that registration number for your vehicles. Vessel name, so official the name is the green energy, and you can follow that for the your own vehicles as well. What are the vessel type? Because it's a medium gas carrier called as ammonia carrier. What is the JV joint venture partner that calls the Merck's Wind? So that is why the joint venture partner is there. Scope 1 emissions that we are going to calculate it. So this is the calculations. For example, we are doing for the financial year 2024 to 2025. Then you have to calculate all the distance traveled by the particular vessel that is called as a green energy. And here you can calculate it, the distance traveled for all throughout a year. So why distance is important? It depends on your methodology. Second type of fuel used. So here we are going to utilize the activity data. So type of fuel used, which is a marine diesel oil, which is high sulfide fuel oil. So that is covers the overall ammonia carrier, and that is a marine diesel oil. Basically, it's a highly diesel oil products. And in that whole year, the fuel amount is 2193.48 liters per year, or it might be per month. It depends on what you are counting. So that is the scope 1 emissions we are counting under the mobile combustion. For the AE distance traveled, that is the source, which is one of the suppliers, and they do have the portals for the fuel tracking, because they operating thousands of ships, and they generate all the fuel amount on their portal, and based on that it decided to quarterly share those data to the ship owner, and ship owner can calculate the whole emission analysis. So there are so many of tools nowadays available to capture the directly fuel, and you can calculate the GHG emissions directly. I will also show the one of the tool that nowadays utilized by the corporate company, and I have built that own tool, and I have shared to the various types of corporate companies in UK, and they are utilize those kind of GHG emission tool. So now we do have the fuel amount, uh, and here the blue area is part of the GHG emission factor. So now the game is started. That emissions factor for CO2 is different. Emissions factor for methane is different. Emissions factor for N2O is different. So these three gases are part of the GHG emission. So you have to understand that for the mobile combustion, this three gases is the GHG emissions and greenhouse gases, where it's part of the CO2 equivalent. So GHG emissions is calculated through the CO2, methane, and N2O. Now, you might have questions that from where I have taken this emissions factor. So I have also add the emissions factor table. So now, as we mentioned, we have to report very thoroughly and your Excel calculations is very typical. So you have to maintain all the data ready so that any third party is coming up and you can ask for that. So now here you can see that CO2 only. So that is only the CO2 related emissions factor, and when you multiply by this emission factor, you will get the CO2 tons of CO2 only. There is a no CO2 equivalent. So that is for the methane, that is for the ethane. Now here you can see the CO2 equivalent emission factor with GWP 100. So what is the meaning of CO2 equivalent emission factor? It means here you can see that uh, 3.114, and here also you can see the 3.114. So now you have to calculate the GWP multiplication. So for example, you can come here, and if you are utilizing AR6, which is assessment report IPC. So IPCC every year, every 2 years, 3 years, utilizing the report of assessment report, and they publish the GWP area, and in that you can utilize AR6 or AR5. So AR5 is the last year. Now in 2025, in 2024 to 2025, they have published the AR6 and global warming potential for the 100 years, and that is important for to calculate the CO2 equivalent. So here you can see that for the CO2, GWP is 1. So you have to multiplication by the 1 only. For methane, you have to multiply it by the 29.8. For the N2O, you have to multiply by the 273. I am going slowly because some people are just started their GHG emission or the ESG or the climate journey, and some people are professionals to calculate those kind of stuff. So that is very important. So here now you can see that if the CO2 emission is 3.114, then your CO2 equivalent emissions factor will be the same because it's a multiplication by the 1. So here you can see that it is multiplication by 1 only. Similarly, if you count methane as a tons of CO2 equivalent, then what will be the multiplication? Then these are the factor, which is a simple CH4 factor, and multiplication by the 29.8, which is global warming potential. And you have to understand that you have to multiplications by this GWP that is published by the IPCC. Similarly for the N2O as well, 273. Okay, and that whole stuff that comes under the 3.16463, you can definitely utilize based on your requirement. So that is the total of this whole three. So you can see that sum of the all the 3 tons of CO2 equivalent emission factors, and that includes the GWP, and that is why it is called as a CO2 equivalent emission factor with GWP. So ultimately CO2 equivalent is cover CO2, CH4 and N2O, and individual emissions factor is separate. Now the total CO2 emissions will be different because the emissions factor is 3.114 here, and for individual total CH4 emissions will be different, and individual N2O emissions will be different because it's not covers the GWP, and overall emissions that is cover the GWP, which is multiplication by the CO2 emissions factor, which is a CO2 equivalent, and the 2.2193.48, which is a fuel amount, and that is the main amount that we are looking for. So that is cover 6941.55. So total emission for the scope 1 for the green energy vessel is 6941.55 CO2 equivalent. So that is part of your whole scope 1 calculation. Just quickly share the emoji or share comment if you not understand this whole process of scope 1 emissions. and I will move into ahead. Thanks. I can see that people are commenting and other things. Okay, great. So let's move. Please clarify the activity covers distance and amount both. Yeah, so in scope 1 emissions, since it's a mobile combustion, the activity will be only the fuel amount because we do have the fuel amount. So here, if you don't have the fuel amount, then you can go with the distance travel based calculation. So in scope 1, under the mobile combustion, you can calculate based on the requirements and what are the calculations for the fuel amount based calculations and what are the calculations for the distance travel nautical mile. So if you do have the liters or kiloliters or the gallons of your petrol diesels related fuel amount, then you have to just multiplications by the emissions factor. Why? Because ultimately we do require the oil products or the petrol diesel products, and we know that particular product generate the CO2. If we do have the fuel amount, then definitely we can count. If we don't have those kind of fuel amount, then we have to calculate through the distance. That, for example, here 66,433 is the nautical mile, is the distance, and industry average is calling that every vessel require 25 liters of 25 liters of marine diesel oil to travel 1 nautical mile. Then you have to multiply by the 25, and that will be your fuel amount. And that fuel amount can be calculated through the uh, emission factor. So I hope I answered your questions for regarding uh, calculations of the distance travel and the things. So yeah, I will share this Excel and you can see that formula so that you can understand better. Now let's move into the another row. So here we already seen that it is calculated by the total GHG emissions multiplications by the total fuel into the emissions factor. You have to understand that how emissions factor is working, and you have to mention that in your Excel if you are doing Excel calculation. So here now you can see that biofuel CO2 emission is zero since there is a no particular biofuel utilized by the vessel. So that is why there emission reporting monitoring system. So supplier or operators has utilized the Voxel FOS. So that's why it's a monitoring system. Source of emission factor is UK DEFRA, and ultimately the overall total emissions for the scope 1 is this. So you can utilize the whole stuff. Why this is important? Because there are so many of vessels, so many of vehicles you can calculate, and overall scope 1 you can summarize in this particular V column, that is part of the total emissions business wise for the tons of CO2 equivalent, that these are the emissions. And then definitely it's a different air pollutant emissions, so it is very separate than the GHG emissions. So air pollutant emissions is very much separate than the GHG emissions. Make sure that you should not calculate those kind of air pollutant when you are doing a GHG emission. So air pollutants, that part of the SOx, NOx, PM10, PM2.5, and NOx. So that is important to understand that air pollutant emission inventory is separate than the GHG emission inventory of climate change. So here we see the scope 1 emission. We saw the emissions factor is working based on the GWP. You can utilize those kind of emissions factors through the 𝗘𝗺𝗃, through the US EPA, through the Indian related CA emissions factor, Brazil related emissions factor that developed by the central authority. So those emissions factor is very important in scope 1 calculation, scope 2 calculation, and scope 3 calculation. So you have to make sure that you have documented all this stuff. Let's move into the scope 2. So in scope 2, that is electricity indirect emission, so electricity purchase. So here we mentioned the three office, which is London office, 𝗠𝗎𝗃𝗃 office, and scope 2 related energy. So that this is the amount which is very hypothetically amount, and these are the energy consumptions consumed by the offices. So if you are into the different services that your offices have, or your service, your company have the manufacturing unit as well, then also you have to mention in the scope 2, and you have to calculate the energy consumptions, and then calculate the scope 2 emission. So here you can see that in Singapore office, these are the energy consumption in kWh. We are utilizing 𝗘𝗺𝗃𝗃 emissions factors. So for the scope 2 emissions, location-based emission factor is 0.417, and overall CO2 equivalent will be 2.75. So it is simple multiplications of energy consumptions into the emissions factor. So similarly, 𝗠𝗎𝗃 London office, and the total will be the 16.90 for the scope 2 tons of CO2 equivalent. Now, if you don't have the energy consumption handy, or if you don't have smart meter to monitor the energy consumptions, or you don't have the utility bills, or your suppliers is not supplying the raw data, then what to do? So for that, you have the alter methodology. So you can obtain the total building area, that you can ask your landlord if you are on the lease, for total building electricity or the heating usage or the cooling usage in MWH or kWh, and the total floor area. And based on that, what you can calculate the intensity first, that total building energy, because you have the total building energy, and divided by the total building floor area. So you will have the intensity that your floor area is consuming the energy. And based on that, you can do estimated usage of energy consumption. So that can be the intensity into your floor area. So you might be definitely apply your estimated floor area, and in multiplication by the energy consumptions that used by your particular area. And based on that, you can mention that amount if you don't have the energy consumption ready. So one method is calculating based on your area. So in your office, if total square foot or square meter area is available, and you know that square foot area, and if you know the building energy, total building energy, then you can calculate through this method. Some situations, if you don't know the total building energy, or if you don't know what are the total energy consumption, then you have to do a industry benchmark, or through the use of regional industry specific energy consumptions through the various types of published data. So in every country, every city, and every state, they do have the average energy consumption based on the area. So you can utilize that and industry benchmark, and whether it's a commercial, whether it's an industrial, whether it's a manufacturing units, every have those kind of average energy consumptions per square feet area. And based on that, you can decide your square foot area office consumptions, and you can calculate the scope 2. The second methodology is a head count methodology. So for example, in your office, 12 people are um, doing the work, and your employee, and based on your employee, you can decide your average energy consumptions per employee. So based on the headcount methodology also, this scope 2 emissions can be calculated. The third one is the residual mix. So if supplier specific data is missing, and it helpful for residual mix emission factor to represent grids carbon intensity. So it is very typical when you don't have any kind of data, and you can do a residual mix, but this the last one is very much typical, and you don't need to do those kind of residual mix. But here it's one note that I mention here, that always document your assumptions and methodology for your transparency. So here I can see the few question. Could you please share the PDF and all necessary document for module 1 to till now? So definitely I already shared the link that you can go through it. Few of the PDFs in module 6 and module 5, I guess, uh, uh, will be in video descriptions, and few of the PDFs will be sent through the email. Sure. Yeah, I will share the details about that if that contains any kind of PDF or any files. So let's continue again for the scope 2. So these are the alternative methodology. I will reshare the link once I will just finish this Excel calculation, and based on that you can go through that stuff. I can see another questions in region where there are scarcity of data on energy consumption. I didn't get the question accurately, but I in region where there scarcity of data on energy consumption. So in that case, what can be done? It's your question, definitely. So you can utilize the international standards of UK DEFRA, US EPA standard, and you can mention that we are utilizing this emissions factor, and we are doing a international emission factor, or maybe you can utilize the IEA emission factor, and you can mention that whole stuff in your documentation or in your report, that we are utilizing this emission factor if the emission factor for particular activity is not available. So that is not the scarcity for you. Right. So let's move into the scope 2. So ultimately you will have the KWH, and you can calculate very easily. Scope 2 is a very easy stuff, and you can do this alternate area that is called as a proxy method, or if the raw data is now not available, then you can utilize those proxy method. For the scope 3, see, these are the categories that you have to understand, and you have to mm, uh, calculate each and every stuff that will cover under the module 8. We will calculate each and every category, that how it's calculated and what are the data type of data is available. So 1 2 3 4 5 6 7 8 category, and I'm not going into the detail, but I wanted to just show that if you are doing a GHG emission calculation end to end, then scope 1 2 3 3 is the typical one. So all the 15 categories needs to be calculated, and it's not necessary for any company or any service or any product to calculate all this 15 category, because it depends on which categories data you have and which categories you are going to report. So strategically you can calculate those kind of stuff. So ultimately this whole calculation is very much typical through the emissions factors. You have to document all the stuffs very well, and it is very much important to understand what things that are available for those kind of stuff. So for that, what I have done is, uh, I also want to share one of the tool that helpful for your calculations, and it is very important for to understand this kind of tool in the area of uh, AI generation. So I have built that whole tool for various corporate companies and various individuals. So I will also want to share here that tool I built specifically to simplify what we covered today. And because as you just seen, the GHG calculations across the scope 1, 2, and 3 can get complex very quickly when you are doing a reporting work and other stuff. So to make this practical, I have developed interactive GHG scope 1, 2, 3 calculator, which you can also access. So let me quickly share my screen for the tool. So I will share the document and the notes whoever has registered, and I will also share into the Instagram group so that you can have all the PDFs and the links on that file. Where would I have shared the Excel file and PDF? So still this session Excel PDF file has not shared. I will share after this session. Now I will share the screen for the tool that I mentioned that I have developed. Just comment when you see this tool so that I can get an idea. Can you see my tool now? Someone is just doing a comment for whether you can see my screen or not. Okay, thanks, Vinod. Again, you are the only active commentator for my doing stuff. So yeah, so here what you are seeing is simple web-based calculator. So that I developed after so many of juggling with the data and after my experience with calculations and collecting all the data stuff, and some people are not giving the data and are not available those data, then the time consuming stuff and end-to-end reporting, financial reporting and non-financial reporting, it's very tight deadline. So I built those dashboards, and that is a web-based calculator. So what here you can enter the scope 1 fuel data, scope 2 electricity consumption, input any kind of scope 3 category that can be estimate, and instantly see emissions outputs in terms of CO2 equivalent. So you don't need to advance your spreadsheet or the formulas. The logic, the overall logic is already built in a backend. So you can use this tool in two ways: for your organization's emission analysis or purely for your practice and the learning experience. So let's do. I quickly show you the tabs that I already built in. So you can mention the activity date whenever you are collecting, or whenever you are mention the dates for that. For category, you can mention the scope 1. Let's take the diesel type, natural gas, petrol, and other type as well. Uh, you can also mention the overall region. If you are in India, if you are in EU, US, APEC, so you can mention the global average. Now here is very good point. You can use custom emission factor based on your location. Otherwise, it's by default it's a UK DEFRA emissions factor. So you can utilize the use custom emissions factor. Company has developed your own emissions factor. So that is you can utilize here, and your input of your in units, since it's a diesel, that it will covers the liters or the gallons, and you can input the liters. The quantity I put 500 just for the example. And the uncertainty, so sometimes the data uncertainty is there. You might have calculated through the distance, you might have calculated through the other raw data and other kind of stuff, so that it's helpful for you to understand how it's working for that. So I'm just giving a more uh, higher resolutions and a higher sign, so you can see the actual tab. So here is, you can mention the uncertainty of percentage, and you can mention the actual 0% uncertainty, and you can just click on the add data entry. So ultimately it will cover the data entry here. So you can see now the interactive filters will have the data range, that is 17 February. Scope 1 is there, activities diesel 1 category, there is a 0% uncertainty. I will show the other tabs as well. It is a long tool as well. Now let's add the scope 2. That is part of the electricity. You can mention any kind of electricity for any kind of region. Uh, Global average, again, you can mention under the kWh or the MWH. Quantity can be the part of 1000 I mentioned. Uncertainty I'm putting at 2%, and it will cover. So here you can calculate the overall filter emissions accurately. I'm sorry for my bad breath. So 2.16 tons of CO2 equivalent is your scope 1 and 2 emissions, and that can be equivalent cars per year will be zero point 0.5. There are two entries, and average uncertainty is 1%. Now you have the reduction goal progress as well. For the scope 3 also you can enter, since we have not seen all the category, but I will just add one of the category. So we do have the overall quickly filtered emissions for the scope 1 to 3 emissions, and now we have to add the reduction goal. So here the goal tracking is there. So for example, your company and your board members and your whole ESG committee and sustainability committee decided that this year we are going to target a 20% reduction based on the current baseline. So if you have the baseline data that you already entered, then you can have a set current baseline, and since it's 20%, then your target will be the 3.17, and your current baseline is 3.96. So current filter is 3.96 for your whole stuff. And you can monitor for the time series tracking. It can be monthly, quarterly. You can add different data, and you can monitoring monthly and quarterly data based on the requirement. So in today's February 2026 month, you can see the whole emissions for the scope 1, scope 2, and scope 3 emissions is based on the requirements. Here is the pie chart complications for how scope 1, scope 2, and scope 3 divided, and this is the pie chart by activity. Also the insights and scenario modeling, that top emission hotspot is the scope 3. As I mentioned, often scope 3 is the main hotspot. And for this particular insight and scenario modeling, you can see the graph. Since you have mentioned the 20% reduction, so you can decide if I can decide 30% of reductions in my activity emissions, then what will be the total reduction. So you can see the total reductions by your next year. So that is there also. And also the scope 3 completeness. So since we already entered only one data, so that it shows only the bar of this. Then reporting and compliances, all the scope 1, scope 2, scope 3, and any kind of uncertainty data is there or not. So that is the all the tick mark. So all those things is tick marked here, and based on that, it's generated the executive summary that total emission is this, scope contribution is this, and what are the recommendations. And these are the three recommendations. You can download the CSV file, you can download the text file, and you can also calculation download the transparency log that you already entered one by one. And here you can select the bulk entry from the downloading by template, and you can upload all the data that you have, scope 1, scope 2, and scope 3 emissions based on the template requirements, and automatically you can get the overall emissions calculations through this web-based dashboard. So it is very important to understand that how this web-based dashboard is working. I have share this to the many companies, and typically they pay around £70 for those whole similar calculators and templates for those kind of stuff. But for everyone attending those webinar, I am offering this access, but based on the paid calculator. So I am providing under the £20. So just to help you to get standard faster and make your ESG and climate work easier. So if you are interested, you can get access through this link. I'm just sharing into the chat box. So what you have to register once you get the link, and you will be guided on how to use the calculator along with supporting resources. So ultimately you will get the link through that particular requirements of calculator, and you can just calculating that whole uh, web-based GHG emission scope 1, 2, 3. So I genuinely build this to save the various time that ESG professional, sustainability professional, and climate professional are utilizing. Instead of struggling with manual formulas, you can focus on your other analysis and reporting and strategy part for the net zero decarbonization and other part, because GHG emission is very take time taking calculation. So if you would like to simplify your scope 1, 2, 3 calculation, feel free to use this tool. I'm sharing this tool to the chat box. Can't hear me. So I'm also pin this link. So you can just click on that particular link. You will be redirect on the GHG emission calculator, and it's a paid calculator, and you will get the dashboard link, web-based dashboard link, along with the material that what are the templates and other stuff. And these are the web-based calculator that utilized by UK-based, London-based corporate company, and we sell to the companies through the 70 to 100 pounds per user. So this is the very special price for the webinar attend. If you are interested, you can go and you can check. So overall with that, I will also be sharing the additional template and spreadsheet in our ESG and climate analysis Instagram group. So please join that if you have not joined that Instagram group. And for that, before we wrap up today, I also want to briefly share something for those who like to go deeper for the climate scenario analysis. So since GHG emission is very much important for calculations, the climate scenario analysis is also very important if you are into this field. So you have to understand that why climate scenario analysis is important to understand, and why climate scenario analysis calculated very well. So for that, what I have done is I also want to briefly about the overall climate risk assessment, climate scenario analysis, and career-focused climate-related skills. So alongside of this ESG and reporting series, I have built a dedicated climate risk learning track. If you are interested into the climate scenario analysis, that designed for the professional who want a structured practical knowledge in physical risk, transition risk, scenario analysis, and climate-aligned reporting work. So here is the final version of the climate scenario analysis stuff, that is uh, for the climate risk assessment, which is typical to understand and typical to calculate. So first is the foundational climate risk bundle. So this is the perfect if you are just getting started, and it covers the fundamental of climate risk assessment and management with 8 comprehensive modules, so designed for to help to build strong climate risk foundation. So nowadays climate risk analyst is very much are on top of the priorities across the various countries, and also the lots of other countries in UK, US, as well as in EU, but in other countries as well. So they get a good package of climate risk if you are into the climate risk analysis. Second one is Climate Career Accelerator Bundle. So this one is ideal for professionals and career changer. It includes everything in the foundational bundles plus climate career pathway with 13 modules in total, helping you to move from learning into the applications and the career position. So that covers the accelerator bundle. And third is all access, that covers advanced ISSB and TCFD climate scenario analysis through the SSPs and NGFS. So with 17 modules overall, that giving you end-to-end climate risk expertise. So this all the stuff is separate from the end-to-end ESG reporting in the climate series. That modules will definitely accessible to all my subscriber and followers. But this three bundles, and the third one is all access climate risk masterclass bundle, is separate for the climate risk expertise only. So here, since based on the access masterclass, it's for the 85 pounds, which is almost convert into your local currency. And since we have the webinar exclusive offer, we do have the climate 15. You can add that climate 15 code by scanning this whole uh, QR code, or maybe you can just click on that particular link that I'm going to share into your uh, chat box. So you can click on that link, choose your course or package, and then add the code of climate 15, and you will get the 15% off. So ultimately, definitely it's a packaged all access masterclass. Is 85 pound, and that covers the climate risk assessment very well. If you are interested for the particular dashboards and web-based dashboards, you can go that particular link. And if you are interested in the whole uh, current masterclass of climate risk assessment, then you can utilize that this link that I'm going to share in your chat box. So that is a very good initiative point if you are interested on that side for the climate risk assessment. And we will have and if you are interested for the calculator, I have pinned the link for the GHG emission calculator. Foundational climate risk link I have already shared. Now I'm going to share the second and third link. And I would suggest that if you are interested in climate risk assessment and climate risk analysis, you should join the last all access masterclass, which is a very discounted price that happening today. And it will helpful for you in your career, in your job, and which is a very demanded positions right now in the market because of the regulations and because of the government pressure. So you can go ahead. And if you are interested for the web-based web-based GHG emission calculator that I already shared in the pin comment, then you can utilize that chat box link. I'm also sharing GHG emission calculator link. So you can just go through that link, just apply for that, and you will get the GHG emission dashboard link very easily, and you can now calculate it through the emission dashboards. And ultimately, this all for everyone attending today's webinar. I'm offering that 15% discount on the foundational accelerated career and all access on that site. So if these courses are designing to complement what we are doing into the end-to-end ESG series. So if you want to deeper expertise in climate risk assessment, scenario analysis, and real world example, you can go ahead. And if today's GSC session is sparked your interest in your climate strategy and risk, so this is the great step that you can calculate. And thank you again for joining today. And I look forward to seeing many of you in module 8 for scope 3 emissions and other part of the module. I'm also going to share the module link. Yes, Pooja Gupta has asked, are we going to have a case study? Definitely. As I mentioned earlier, in few of the modules, we will have the uh, case study. So in module phase 5 and phase 6, the case study will be coming up. So you have to be part of the Instagram group so that you will get an updates very frequently. I will share again the Instagram link. Yeah, so I'm sharing Insta page and the group link. So the Insta page name is the Climate AI Lab. Thanks, Sandeep, for your comment. Yeah, Pooja, I will provide the completion certificate, but I cannot commit at this moment because it's under process to do a certification things. But I will provide through my signature for this particular course that I mentioned, the climate risk assessment, and you will get the certifications from that. We are also in talking to another institute. So if they are going to collaborate, then they also are part of this whole certification process. But definitely, you are going to get a certificate for the climate risk assessment. Yes. Thank you very much. I will definitely will be in touch. I will insist you to join the Instagram group and follow me on the Instagram so that you can get an update very quickly because I'm very much active on the Insta and the YouTube. You also must subscribe my YouTube channel also so that you can get update very quickly. So thank you very much for your patience to take the GHG emissions in your next step, and I hope you enjoyed the session. And just subscribe the YouTube education channel. And thank you again for joining today. And I look forward to seeing many of you in module 8 on scope 3 emission as well as the other modules that are upcoming. If you still have not joined email updates, Instagram, YouTube, LinkedIn, WhatsApp, please join because all the updates will be there and it's exclusively for the subscribers and followers only. So yeah, thank you very much. Go climate and through. Thank you very much. Thank you very much. Thank you. Thank you, guys. Thank you. Thank you, Diana. Good to see you. Yes, definitely. I can assist you for masterclass. Masterclass will be one-to-one as well, and for the offline, I can also assist for the PhD topics in this area because there are so many of research areas available, and there are so many of scholarship is available. So you can do along with your scholarship. So will be in, just message me on any platform and I will be on touch on that side and we will have a one-to-one call on that side. But I will definitely insist you, suggest you to join that masterclass of climate risk assessment. Thank you, Vinod. Good night. Good to see you. Thanks. Thanks for your comment, 𝗘𝗺𝗂𝗃𝗃, but I'm not sure what's how to pronounce. Thanks, Pooja. I would suggest to go to the Instagram. I would suggest to use the GHG calculator if your company or your individuals require on that side. Sure, Pooja will be on one-to-one call. I will explain the details and definitely you will get the certificate. If you have any last minute questions, you can just ask or we will end the live stream in 5 minutes. Sure, 𝗘𝗺𝗃𝗃𝗃𝗃. Again, I'm just pronouncing your YouTube name, but if you have any query to join your masterclass, my masterclass, I can see the 30 people already subscribed and okay, 32. So they will get the masterclass update and all 32 people has subscribed for the bundle. That is a very good initiative and they will have a good discounts. And again, this climate 15% discount is just for the few hours. So uh, mention that whole stuff. So yeah, climate 15 is the code. Pooja, the climate 15 is the code. I'm just copy pasting that climate 15. So basically, your discount is already discounted price from £100 to £85, which is already saved of £15. And if you are entering climate 15, then again you will get a 15% off. So you will add the climate 15 as a code. Lots of people already entered the code and I can see the subscriptions for that overall masterclass for the climate risk assessment that covers all access masterclass. So that's very nice. If you have any last minute questions, just feel free to comment. Thanks, Pooja. Thanks, Betty. So, Pooja, Betty, if you have any query to subscribe the masterclass, just let me know through any social channel or through my WhatsApp number. Uh, I can see the few query. Yeah, you can. I can see that someone is asking that top net is asking for the recording. So yes, so recording is for your purpose. So if you want the recording, then definitely you can opt for that. That amount will go to the document, not for my purpose. But I can also, when we have classes of masterclass, then I can also provide the recording as well. So it depends on you whether you are going to opt for the recording or not. So Usman, if you heard currently that I mentioned about the recording query, payment through the PayPal or the Visa Mastercard. Yes, you can pay any kind of card, credit card or debit card, or maybe from India prospective UPI is also there. I think so in document, so you can pay on that side. Great, I can see the 39 people has already subscribed, and thank you very much for that, and we'll see you in the masterclass of climate risk assessment. So those who still not subscribe, and if you are interested for the climate risk assessment, please do join. And if you are interested to calculate the GHG emission dashboards, then you can just click on the link that I have already pinned. For the GHG emission calculator, uh, these are the link. Someone has asked, he missed the link. So this is the link for the GHG emission dashboard. You have to pay the £20 and you will get the web-based dashboard link so that you can access that dashboards. As I shown you, you can download the whole report, you can upload the data, and you can have access of pie chart, and you can also download those pie chart in your PDF, and you can generate the ESG report based on the requirement. Sure, we'll be discuss the PhD topics that you want to discuss, and you can join the masterclass for the climate risk assessment. Okay, sounds good. Still we have the 5 minutes, but if you don't have any questions or any comment or anything, then we will close. 43 members has already subscribed those stuff through the various channel, and it shows great uh, things that climate, ESG, and sustainability professionals nowadays taking very initiatives toward those kind of interesting stuff that are happening. And for particular in India now, it's time to gear up because RBI is coming up with the regulations. SEBI is coming up with the updated regulations of BRSR. Similarly, for the Brazil, Malaysia, Singapore, and other developing countries as well that already adopted ISSB. That is part of the IFRS S1 and IFRS S2. So, if you are into this professional and if you want to generate more money through your job, through your service, through your startup, it is the right time to start your journey. And if you need any kind of guidance, feel free to connect one-to-one call, and I am happy to guide on that side because it's a very interesting field. And all the countries are going for the low carbon economy, so you have to part of this whole journey, and you can part of the whole low carbon economy stuff. So thank you very much. See you in the next modules. Keep in touch and join the Instagram group that I shared the links earlier. You can go through that links. Module 1 to 6 I will share into your email box, and based on that you can see each and every modules based on your convenient time. So thank you very much for your patience. See you. Thank you. Bye.